I think risk assets are scared. It's in the price now. But also, I think now it could also get a bit more balanced.
Where is inflation going to settle? How far is the Fed going to raise rates? And what's the outlook for growth?
Some signs that that uncertainty is starting to ease. We might be past the peak point of uncertainty.
I think defensive is the way to go. I'm still a big believer about the physical global economy continues to motor along.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, March 22nd. Our top stories today. The Fed chair takes a more aggressive tone toward inflation. Jerome Powell is ready to raise rates by a half percentage point in May if it's necessary. That led to one of the worst days in decades for the U.S. bond market. U.S. Supreme Court nominee Ketanji Brown Jackson is set for questioning by a Senate committee. She's told the panel she's an independent thinker who decides cases from a neutral posture. And President Biden warns that Russia may strike back. He told the private sector they should be prepared for Russian cyber attacks and called the Kremlin's use of hypersonic missiles a sign of desperation. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And Kailey, incredible moves in bond markets, a real move to the upside, move higher in bond yields, and yet equity markets kind of taking that in their stride.
Yeah, absolutely, Anna, and that was definitely in the case in Asia overnight. Broadly, it was an up day for the benchmarks there. The MSCI Asia Pacific Index as a whole was up by about 6 or 0.7%, actually nearing more than 1 percentage point at this point. One of the big outperformers within that was Hong Kong. That was a move led by technology stocks, specifically by Alibaba. That stock was up more than 11% overnight after it hiked its buyback program to $25 billion, the second time it has boosted that program in the last year. So a sign of optimism for that company, maybe on the easing of the regulatory crackdown. Other outperformers when it comes to equities include those in Japan, and partially that was due to the weakness of the Japanese yen, the big underperformer in Asian FX, weaker against the dollar by 0.8%. We are through the 120 level, which is somewhere we have not been since February of 2016. So the weakest yen going back more than 6 years. And finally, as Anna was saying, you are seeing that selling pressure in bond markets globally. It started with treasuries off the back of that hawkish commentary from Jerome Powell yesterday, but it continued in New Zealand and in Australia overnight. Specifically at the short end of the curve, that 2-year yield in Australia up 17 basis points, more than a 3 standard deviation move. It is at the highest in about 3 years, Matt.
Yeah, I think that the yen move is particularly of note, especially for automakers that need to buy so many parts and supplies from Japan. Take a look at U.S. markets. S&P futures are up about 0.4% right now, so it's a risk-on day. Investors are letting go of bonds, and the 10-year yield is rising to 234.05. We should note that that is lower than the yield on 7s, 5s, and 3s. And right now, just about 15 basis points away from the 2s. So watch it closely. The 2s have been incredible rally in yields, a sell-off in the debt. NYMEX crude right now at 111, so coming down little less than 1%, but still at a relatively high level. And oil has been one of the thorns in the side of Jerome Powell and the Fed in terms of inflation. So they're, I'm sure, happy to see that come down a little bit. Bitcoin gaining 3.4% to 42,535. This just signifies that it's a risk-on day because Bitcoin has been so correlated of late. Anna, what are you seeing in Europe?
Well, Matt, we see a risk-on day here in Europe, but it didn't start off that way. Certainly the futures picture through the Asia session was signaling that we'd see something flat to negative for European stocks, maybe negative in the US as well. But oil prices were higher then, and oil prices have actually retraced quite a lot in the overnight session from earlier highs. More on that in a second. But this is the FTSE 100 up by 0.6%, the CAC 40 up by 0.3%, the Xetra DAX up by nearly 0.9%. So a real turnaround in sentiment here on European equity markets, and all of this in the face of those higher yields. The Kailey was talking about through the Asia session, and clearly, obviously, emanating from what Jerome Powell had to say yesterday. This is Brent crude. 114 is the start of the Brent price right now for a barrel of Brent crude oil. It was 119 a little bit earlier on in the Asian session, and so we were up by a few percentage points on the oil price once again. We were headlining that story earlier on in our programming here in Europe, but we really turned around that particular picture, the oil picture, looking a little less, making moves lower in this morning's session. Nickel, worth noting as well, down by 9.8%. That is not the limit to which it was able to go today. It could have dropped by 15%, but we're actually seeing trading. We're seeing buying and selling happening in nickel prices on the LME as we've seen this price come down to more where it is in Shanghai, which is a market that was open through all of this short squeeze that led to a closure of the markets here in London. We'll bring you our conversation with the LME CEO a little bit later on. That's really interesting. Euro dollar 110, a lot of strength in the dollar. We talked about that going hand in hand with higher yields in treasuries, and we did have some euro weakness, a little bit more euro weakness earlier on in the session. And I put in here Adidas, this one for Matt, of course, who likes to keep across those German names perhaps still. And we saw Adidas, of course, responding to what we heard from Nike, that better than expected result coming through from Nike, maybe getting through some of the supply chain issues, Kailey, that playing well for them and seems to be playing well for European peers as well.
Yeah, absolutely. And we will have more on Nike in just a minute, Anna. Great look at Europe there. We also wanted to mention something about Russian assets. The Russian finance ministry says it has paid a $66 million Eurobond coupon in full. We will continue to keep you up to date on those bond payments as creditors really look to see whether the country is going to continue to meet its debt obligations. Now a look at what else is ahead today. It is day one of the Bloomberg Equality Summit. Speakers will include San Francisco Fed President Mary Daly, as well as Macy's CEO Jeff Gannett. ECB President Christine Lagarde and the New York Fed's John Williams will be among several notable speakers at the BIS Innovation Summit. And after months of delays, Tesla is due to inaugurate its new factory in Berlin. Matt Miller is in New York, so he won't be there, but Elon Musk will be in plans to challenge the likes of Volkswagen and BMW on their home turf. And finally, later on this morning, we have an exclusive interview with St. Louis Fed President James Bullard at 8:30 a.m. New York time. Will be really interesting to hear from him after we heard from Powell yesterday, Matt.
Yeah, absolutely. Clearly the most bullish member of the governing committee. Now, the bond sell-off is deepening after Fed Chair Jerome Powell struck a more hawkish tone on the central bank's campaign against higher inflation.
What I've said is that if we think it's appropriate to raise 50 basis points at a meeting or meetings, we will do so.
Bloomberg's Danny Berger joins us for more, and it's really been incredible, right? I just looked at the Bloomberg U.S. Treasury Index down almost 5.6%, making it the worst quarter since at least 1973.
Yeah, and that destruction continues today. The surprise was all yesterday, which I should say the bond market surprise to Powell saying we could see 50 basis points in itself is kind of a surprise because the Fed had adopted this posture of fighting inflation at all costs. But that selling, the fire in the bond market continues today, led by the front end of the curve. The two-year yield easily blowing past 2% at 2.18 at the moment. So this is a yield curve where the belly of the curve is seeing a lot of inverting, a lot of concerns about will the Fed break something? Can it engineer a soft landing? Well, we're also starting to see more bets of 50 basis points. It's baked into the picture for May in terms of if you look at Warp Go in your terminal. Goldman Sachs says it's not just May, it's going to be the following meeting as well that sees a 50 basis point hike. So all of that combined does get a curve, at least in the 2s, 10s, that is closer to inverting. That's the chart I have up for a radio listening audience. So 2s, 10s now just around 16 basis points, but Powell himself in that conversation said that it's the front end, it's the 18-month curve that he is looking at. If you look at 3-month to 18-month T-bills, which is the other curve I have up here on my chart, that has actually been steepening. It's around 250 basis points. So if this is what Powell's concerned about, if he's watching the market for reaction for odds of recession, he has a lot of runway to tighten before we get more inversions.
Yeah, absolutely. He was not thinking 2s, 10s, not 5s, 10s. He wasn't thinking 2s, 30s or 530s or any of the other curves that are available. He was thinking about that 18-month futures spread, which you point out there, Danny, tells a very different story. It is steeper and gives him room to move. What about oil prices then? We've seen a lot of volatility in oil prices through the Asia session into the European session this morning, Danny.
Yeah, it was remarkable. At one point, we were up some 4% today. That's completely reversed. We're to the downside. Now, we are getting closer to that peak reached earlier in the month. We're about 7% away from that, given we've rallied about 18% in the 3 days prior to today. But today's turnaround just really underscores the volatility in this market. Now, of course, it's driven by headlines. It's driven by headlines of Europe potentially looking at a Russia energy ban this morning. That helped it move higher. But there's also a lot of liquidity problems in this future market. markets. Bid-ask spreads have been really wide, so that often leads to this volatile trading like we had today. Of course, it goes just beyond the futures contracts and the volatility and the liquidity. It also has political implications. Of course, it's something that Fed Chair Jay Powell is worried about, but it's also something Biden has worried about as well. A really great scoop on the terminal from the Bloomberg News team that President Biden's aides have encouraged him to thaw out some of the relations with Saudi, that it's not in the U.S.'s best interest, because if they don't have Russia oil anymore, they might have to be turning to Saudi. So that is something that's taking place behind the scenes, according to people familiar. However, those reports also suggest that Mohammed bin Salman, he, on his end, is not ready to play along that.
Yeah, not taking the call just yet. And those inflation effects hitting other central banks as well. I said James Bullard, member of the governing committee, which is so embarrassing. I'm so European, right? That's an ECB thing. What I meant, of course, is one of the most hawkish Fed presidents. Danny Berger, thanks very much for joining us. Bloomberg's Danny Berger. They're looking at the big moves in oil as well as bonds. Let's get over to D.C. right now into politics. Judge Ketanji Brown Jackson told a divided Senate panel she was an independent thinker who decides cases from a neutral posture. Jackson began testifying at a hearing yesterday on her nomination to be the first black woman to serve on the Supreme Court. We get more from our Washington correspondent, Joe Matthews. So, Joe, what do her chances look like right now?
Chances look great. I think most everyone expects that Ketanji Brown Jackson will be confirmed, but she's got a couple of potentially tough days ahead. Yesterday, this 4-day process opened up with the formalities, the introductions, but actual questioning begins today, and it's going to be a long session that will likely bleed into tomorrow. There are 22 members on the Judiciary Committee, Matt. Each will get 50 minutes each to question Judge Brown, and we got a little bit of a sense of where this is going to go yesterday with opening remarks from the likes of Senators Ted Cruz, Josh Hawley, some of the other Republicans on the panel, including Lindsey Graham, the former chair of Judiciary, who were really hitting home on not only judicial philosophy, which she says she doesn't really have, but some of the other issues that they'd like to get into her record as a public defender, defending, for instance, Guantanamo Bay detainees. They're trying to paint a picture of her being a bit soft on crime, which might last for the balance of the next 2 days. But still, when this committee votes on Thursday, she is expected to be confirmed on the committee, and then it would go to the full Senate.
All right, Joe, that's on the domestic front. Let's turn to foreign affairs, because President Biden says Russia's use of hypersonic missiles against Ukraine is a sign that President Putin is growing desperate. Take a listen to what he said yesterday.
If you notice, they've just launched their hypersonic missile because it's the only thing that they can get through with absolute certainty. He wasn't anticipating the extent or strength of our unity. And the more his back is against the wall, the greater the severity of the tactics he may employ.
And Joe, President Biden went on to warn of potential cyber attacks, Russia attacking U.S. companies, asking them to lock their digital doors, play defense. Is there any sign of more offense coming from the administration and potential retaliation?
That's a good question. Evolving intelligence was the term that the White House used yesterday as we talk about the possibility or even likelihood of a cyber attack, not against Ukraine, to your point, against the U.S. It's unclear exactly how the Defense Department, how the Biden administration would interpret such a move. So they are, in fact, going straight to companies. We understand the federal government has briefed about 100 companies on this. It's really something, too. We're not talking about very advanced technologies. They're asking that companies simply encrypt sensitive data, which you would think they were already doing, and to provide double authentication, which a lot of people have for their basic personal email accounts. So corporate America is being asked to harden defenses because Putin is looking across the ocean now to the U.S. With regard to that hypersonic missile, indeed, the administration is very concerned that as this enters a stalemate, Russia will start using more destructive, longer-range weapons against Ukraine, and that is what it appears to be the strategy right now.
Joe, thanks very much. Bloomberg's Joe Matthew. You can listen to Joe every weekday on his radio program Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Let's get to some breaking news we've just seen across the Bloomberg. The EU is to work toward joint gas purchases. This according to a draft summit statement of an EU leaders summit that is set to take place this week. EU leaders may endorse taxing windfall profits of energy firms. Let's put that into the mix with other news lines that we've heard around energy with our European correspondent Maria Tadeo, who joins us from Brussels. Now, that was about gas. That's about joint gas purchases. The news that has moved markets this morning has been around oil. Oil has pulled back a little bit from its earlier highs, but tell us what we know about the politics here, Maria.
Well, Anna, when it comes to the breaking news that you referred to, this is a proposal that was actually pitched by the Southern Europeans, including my home country, Spain. They've been pushing for this for weeks to try to get something that looks like a joint European response to the prices that we've seen that are now very much translating to consumers. A lot of this has to do with perhaps joint purchases, joint storage. So all of this is featuring now into what is a domestic conversation in Europe about how to bring down bills. Now, the other big issue, of course, has to do with Russian imports. Now, we've seen so far the European Union saying, no, we're not in a position to accept that. But Anna, what we know is that this debate is very much back on the table, and it's been brought back on the table by the Eastern European countries, the Baltics, the Polish. All of them say we really need to hit Russia where it hurts. And that, of course, is the energy sector. What I would say, however, when I speak to European diplomats behind the scenes, they say right now it's a complicated picture. And the reality is we don't have unanimity on it. Every major decision by the European Union has to be agreed by the 27 countries. And we're looking at potentially a veto from Hungary, from Viktor Orban, who is facing re-election in 2 weeks' time. So the question is, are we going to see anything that looks like a full ban? You know, my sources will tell me not this week, not by the end of this week.
All right, Bloomberg's Maria Tadeo. Great reporting, as always, from Brussels. Now, Ukrainian President Vladimir Zelensky says the nation would hold a referendum on the terms of any potential peace agreement. But right now, peace is still out of reach, and the humanitarian crisis due to the war is ongoing. The invasion has driven 10 million people from their homes, according to the United Nations. Let's get more with Bloomberg's Aggie Cantrell, who joins us from a humanitarian aid center in Poland. Aggie, what are you hearing from the people, the Ukrainians that you speak to, about their optimism or lack thereof when it comes to a potential peace agreement?
It seems that at the moment the peace agreement feels pretty far off for the people who've left their homes. A lot of the people who've come here were already internally displaced within Ukraine. They're from areas under heavy bombardment. And this is also important to point to the tactics that the Russians are taking at this time, where we see that they haven't managed to encircle the capital, Kiev. They haven't been able to really gain that major foothold there. And so they're refocusing to places like the east of the country, around Mariupol, the port city, which has been under bombardment since March 2nd. And this seems to be a tightening or a narrowing of the Russian military strategy so that they remain focused on the areas where they could really gain ground in those places and secure that long sought-after corridor between Russia and Crimea. And so that's a key focus for them. And then when you look at what President Zelensky was saying, he was saying that while there may be a commitment on Ukraine's behalf to not join NATO, that would need to come with a ceasefire and would have to be part of a peace agreement that was then held as a referendum for the Ukrainians to take. He's not willing to do that without the say-so of Ukrainians to make sure that this is more of something that will go forward even past his presidency.
Well, and of course, you need an agreement first. Thank you so much to Bloomberg's Aggie Cantrell in Poland. Now, let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. I wanted to check on shares of Boeing because, of course, it fell 3.5% yesterday after that China Eastern aircraft crashed in southwest China with 132 people on board. That was, of course, a 737-800 NG model plane. Unclear to this point what caused the crash, but right now China Eastern has grounded its entire fleet of that model of aircraft. Right now, Boeing is steady in early hours, essentially unchanged in pre-market trading. One stock sinking to the downside, though, is Okta. This is a software application company, helps with authentication services for thousands of companies. It was reported overnight that they were investigating a data breach. The company's CEO now out saying that there was an incident in January. There's no ongoing signs of malicious activity, but still investors are selling those shares. It's down the better part of 10% in early hours. One mover to the upside, though, is Nike. It reported after the bell yesterday. Sales beat across all regions, including in China, where, yes, business is weaker, but sales didn't fall as much as expected. So that stock getting a nice lift in early hours, Anna. It's up about 6% before the bell.
Yeah, and that story has moved across the Atlantic to European rivals. Now, coming up on the program, Christian Mueller-Glissmann joins us, Goldman Sachs Managing Director for Portfolio Strategy. What does he make of stock resilience in the face of the bond market sell-off? Let us also talk about Ukraine, of course. Orysia Lutsevych joins us, research fellow in the Chatham House Russia and Eurasia Programme. We'll get her expertise on what we're seeing. Really fascinating, this idea of putting any deal with Russia in front of the Ukrainian people, if indeed a deal could be reached. And don't miss our new show, Bloomberg Crypto, airing today and every Tuesday at 1 p.m. New York time. Join Matt and Kailey there today. They'll be hearing from the author and notable crypto skeptic James Rickards, as well as Perianne Boring, founder and president of the Chamber of Digital Commerce. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on Bloomberg Radio and on Bloomberg Television. I'm Matt Miller here in New York with Kailey Leinz, Anna Edwards with us out of London. Now, our producer in London, Valerie Sarasulo, put together a packet of charts today that was so good, I feel like bankers should be able to subscribe to her work. This is probably the simplest chart that she included, and for our listeners on radio, what I'll tell you is that we're showing the 10-year Treasury yield going all the way back to the 1980s. In 1984, when Prince came out with When the Doves Cry, the bull market started, and it's gone 40 years now. The question is, are we finished with it now? We're seeing it move out of a range here. Lynn Thomason joins us, Bloomberg Markets managing editor, to talk about what this means for markets. We've just had the worst quarter for treasuries in my lifetime, Lynn, and I'm very old. So is it over?
Oh, that's a good question. I mean, it certainly seems like, the market action today is clearly a sharp sell-off in bonds. And I would just add, I think the other interesting aspect of that is that everything is moving together. This idea of a 40-60 balanced portfolio where some assets go up, some assets go down, doesn't really seem to be working out right now. And we're continuing in the scenario of everything goes up or everything goes down, which I think makes it very difficult to manage.
Well, stocks are moving up today, aren't they, as bonds move down? But I appreciate that's a very short-term perspective to take. I mean, where have we come to after yesterday's words from Jerome Powell? Because some people are surprised that what he said was such a surprise to the markets, but it did seem to surprise many in the bond markets.
No, absolutely. Clearly, some sharp moves we've seen in the bond markets. And I think, a lot of strategists that we've been talking to say, this just increases the question of, are we going to see a recession? Are we going to come into stagflation? And how do we manage that issue?
All right, Bloomberg's Lynn Thomason, have to leave it there, but thank you so much for joining us. Now let's keep you up to date with other news from around the world. Here's the first word. The Omicron subvariant BA2 is continuing to gain ground in the U.S. That's according to COVID test results from the last 2 weeks. The genomics firm Helix estimates that up to 70% of all coronavirus cases in the U.S. are BA2. Investigators are trying to figure out why a China Eastern Airlines Boeing 737-800 suddenly fell from the sky. The crash in the southwestern part of the country is believed to have killed all 132 people on board. Air crash experts are baffled at the plane's nosedive from 29,000 feet. Meanwhile, China Eastern grounded its fleet of 737-800s. And Alibaba has ramped up its share buyback to $25 billion. China's e-commerce giant is reacting to a $470 billion loss of value during Beijing's internet crackdown. The government has pledged to support the economy and finish the clampdown on the tech sector as soon as possible. That triggered a historic rally in Chinese stocks, Anna.
Coming up on the program, Christian Mueller-Glissmann, Goldman Sachs Managing Director for Portfolio Strategy. We'll get his perspective on what we're seeing in bond markets. We've already heard that Goldman Sachs now sees 50 basis point hikes in both the May and the June meetings. How does that sit with balance sheet runoff? Lots to discuss then. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. The Fed chair takes a more aggressive tone towards inflation. Jerome Powell is ready to raise rates by a half percentage point in May if it's necessary. That led to one of the worst days in decades for the U.S. bond market. U.S. Supreme Court nominee Ketanji Brown Jackson is set for questioning by a Senate committee. She's told the panel she's an independent thinker who decides cases from a neutral posture. If confirmed, Jackson would become the first black woman on the court. And President Joe Biden is warning the private sector, improve your defenses against cyber attacks immediately. The president says the Kremlin may be plotting cyber attacks to retaliate for sanctions imposed after the invasion of Ukraine. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Matt, European equity markets, they're perhaps a little stronger this morning than we'd anticipated just a few hours ago. What are you seeing pre-market in the US?
Yeah, well, we see a risk-on picture in the pre-market here as well. Take a look at S&P futures, up just 0.25%, but a gain nonetheless. You have the 10-year yield. Investors feel comfortable enough to let go of the perceived safety of government debt. I love that phrase. Up to 234.78. I will point out that we see higher yields right now on the 7s, the 5s, and the 3s. So you've seen an inversion in the belly of the curve, as another great piece of jargon for you this morning. New York crude down below 110 a barrel now, 109.70. So it's coming down more than 2%. And Bitcoin rising up more than 3% now, 42,452. Just another risk-on signal. Kailey, what are you seeing in the pre-market?
Well, one big mover I'm paying attention to is Okta. This is an application software company, authentication services that it provides for many companies. And there was reports overnight about a potential digital breach. One hacking group did take credit for it, but the company's CEO saying that there was an incident back in January. There's no ongoing sign of malicious activity. Still, though, that stock is down about 8 or even almost 10% now before the bell. I wanted to pay attention to Boeing as well because, of course, we're continuing to follow the story after that 737-800 NG crashed in southwestern China yesterday. The stock was down 3.5% on the back of that. Investigators are still looking for an answer as to why that happened. Right now, Boeing shares recovering just slightly from yesterday's losses, up about 0.3% in early hours. I wanted to point to Tesla as well because its Berlin factory is being inaugurated today. The Model Ys made in Germany will start rolling off the production line. That stock is up 1.4% before the bell. And finally, paying attention to Nike as well, beating across the board, sales on all regions coming in higher than expected. It's working through a lot of those supply chain challenges as well as weakness in China. So as a result, that stock is up nearly 6% before the bell, Anna.
Absolutely, Kailey, and I'll start at the bottom of my board as a result of you focusing there on Nike. This is the European read across from Nike into German rival Adidas, which is up by 2% as we see it now. Back to the top, and this is the broader picture for European equity markets, just like the risk on tone that Matt was talking about for US stocks in the futures market. Well, we see the European session doing pretty well, up by 0.5% if you're long at the market. The thing that's changed since the early hours of the European trading day is the oil price. We were up with 119 being the sort of start of the oil price, the handle, if you like, a little bit earlier on in trade, and now we've really retraced from those earlier highs. That was all driven higher. The oil price was driven higher by reports that suggested that Europe is considering, and our colleague Maria Tadeo talking about this earlier, considering banning imports of Russian oil. Whether we would actually see that agreement reached by the various parts of the European Union and just how quickly it could be reached is another question. And so the market coming back from earlier highs, down by 1.6% right now on Brent crude. The nickel price, we're now seeing two-way action in the nickel price. We're now seeing buyers and sellers, price discovery. We talked to the CEO of the LME a little bit earlier on about all of that difficulty in reopening the nickel market after they had to close it for a few days. Well, we're now down by 9.9%, which is not as far as it could have fallen. Could have been 15% limit down. Once again, it is not, and perhaps this is a sign of normalization on that metals market. And I talked about Adidas already. Matt.
All right, thanks very much for that good market picture there. Let's get now to Christian Mueller-Glissmann. He is Managing Director for Portfolio Strategy and Asset Allocation at Goldman Sachs. And Christian, you know, I thought I would start by asking about asset allocation after the incredible fall that we've seen in treasuries. It's not just treasuries, though. You know, bonds have had an incredibly tough quarter, no matter whether you're looking at sovereigns or corporates. What does this mean to you?
Yeah, listen, I mean, we talked about this before. Like, we know that the standard 60-40 portfolio in the coming cycle is having a much tougher climb. It's likely to deliver lower returns, especially in real terms. And I think the bond market is not going to help you that much with risk management. If anything, it's going to cost you and drive risk. I mean, that's a big difference to the last cycle where growth volatility drove rates volatility. And at the margin, you had this virtuous relationship between equities and bonds. Now rates volatility can drive growth volatility. And that actually becomes a vicious cycle between the two. So I think at the margin, we are kind of avoiding duration. In our asset allocation, we've been underweight both credit and sovereign bonds.
Okay, I mean, that seems like a big statement, Christian, to say that bond markets are not going to help with risk management. Matt's been talking a lot about and we talked in our headlines about the extent to which we've seen this sell-off on bonds, and maybe it is the most in many people's lifetimes. Give us your sort of size and scope of just how material a change, how material a changed world we are in now when it comes to bond markets.
Yeah, I mean, we have a big regime shift structurally underway. And I think that is something that has been in the making for a few years. There's multiple inflationary drivers like deglobalization, decarbonization, the fight on income inequality. Some of those are moving faster in function of the COVID crisis, the Russia-Ukraine crisis. So they underlying will drive more inflation in the coming years, most likely. But I think to your point, I think bond yields have now moved up a lot. So I'm not saying that bonds cannot buffer if we're facing a recession risk and the market focuses on that topic again. The more bond yields go up, the more there is a bit of a buffer. But you have to also be careful about how much an asset, like a safe asset, buffers you in risk off relative to how much it costs you in risk on. And I think that trade-off is not as good anymore.
Okay, and that's where things have changed. Christian, you talk about deglobalization there, some of that driven by COVID, some of that driven by the war in Ukraine now. How material is that going to be? How much of a change in thinking from corporate leadership are we really going to see? And what kind of impact does that have on inflation? Because it was arguably one of the big drivers of lower inflation rates over decades.
Yeah, I mean, just looking at it simply, I think it sounds like it should be inflationary because at the margin, you know, you have reshoring of supply chains, you have less ability to essentially take the best of the global economy to make your company produce the cheapest, best products, no? You could also argue that there's some offsets because with higher energy costs, transport is getting more expensive. You might actually invest into more productivity going forward. So if you have your supply chain completely integrated, you might become more productive. So I think to answer your question, if you go a bit deeper into the deglobalization topic, it becomes very complex. On the face of it, I think in the near term, it seems it has been inflationary, and in particular via the commodities markets, where you kind of see like the segmentation, and it hasn't driven much growth. In the more medium term, I think both the growth and the kind of inflation implications are a bit more difficult.
Well, Christian, of course, inflation front and center for the Federal Reserve, and Jerome Powell made it very clear yesterday they're going to do whatever it takes to combat it. Your colleague at Goldman, Jan Hatzius, now says he sees a 50 basis point hike in both May and in June. Where do you put the likelihood of the Fed being able to execute a soft landing?
Yeah, I mean, you're absolutely right. I think we have a quite unpleasant situation for markets currently, in the sense that normally a Fed tightening cycle is at the early stages quite risk on, and later on you worry about, of course, the kind of financial conditions tightening driving a growth slowdown, because you now have this incredible urgency to tighten. You have a very steep hiking cycle, and that puts the problem much earlier into investors' minds that you might be facing a growth slowdown. And our economists have highlighted they're not only worried about the Fed hiking cycle, they're worried about the fiscal drag that is kicking in the second half at the same time. So you're not just having monetary policy tightening, you also have like fiscal tightening at the same time. And that increases the risk that the growth slowdown becomes more worrying for market, and you get into a bit of a vicious cycle where markets are worrying about recession risk, and by virtue of that tightening financial conditions, which then increases recession risk. But I think what's important about all of this, you got to ask yourself, is how deep is a recession going to be? Because the private sector is incredibly good health, and real rates are still very negative. So the deleveraging pressure might be limited, and then you might be dealing with a soft recession. And that could be a scenario where you have to be very careful to be too bearish on risky assets for too long.
Okay, so there are recessions and there are recessions. Christian, thank you so much for your time. Christian Mueller-Glissmann, Managing Director for Portfolio Strategy and Asset Allocation at Goldman Sachs. Thank you very much. Coming up on this program, Orysia Lutsevych joins us, head of the Ukraine Forum in the Russia and Eurasia Programme at Chatham House. We'll talk about the latest in Ukraine. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an exclusive interview with St. Louis Fed President Jim Bullard. That's at 8:30 a.m. in New York, 12:30 p.m. in London. This is Bloomberg.
Based on evolving intelligence, Russia may be planning a cyber attack against us. It's a patriotic obligation to invest as much as you can in making sure, and we will help in any way, that you have built up your technological capacity to deal with cyber attacks.
That was President Biden speaking yesterday about the risk of a Russian cyber attack on the U.S. Joining us now is Orysia Lutsevych, head of the Ukraine Forum and the Russia and Eurasia Programme at Chatham House. President Biden went on to say that Putin's use of hypersonic weapons shows that he is growing more desperate. What signal do you take from that shift in strategy, and how dangerous a desperate Putin is?
Well, absolutely. We see that the first plan of Putin's war in Ukraine, there was supposed to be a swift takeover of the capital and installing of his pro-Russian puppet regime to make Ukraine concede to his demands failed. And he started this desperate tactics of targeting civilians, besieging large Ukrainian cities. I mean, think about just the city of Kharkiv has over 1,000 buildings razed from the ground. And he started using cluster bombs that are forbidden by the Geneva Convention, now supersonic weapons. He's been so-called nuclear rattling, right, threatening and putting on alert strategic nuclear forces. So all of this points to the fact that Putin is not giving up on his demands for Ukraine. He's also willing to escalate in order to subjugate Ukraine. And he's sending very strong messages to the Western allies not to arm Ukraine. He's targeted training grounds right close to the Polish border in Western Ukraine, airports, and he may target supply routes.
Orysia, I'm starting to feel the kind of fear that my parents must have grown up with concerning nuclear weapons. How big of a concern is it for you that at some point we get into a nuclear conflict?
Well, I will tell you that in Ukraine, that night when Russians took control of a Chernobyl power station, and then when they recklessly attacked Zaporizhia power station, that was the beginning of very strong fears, because Ukraine as a nation lived through the nuclear disaster. This is not something imaginary threat. This is a real threat that had long-term implications. And now there is a possible speculation on the false flag attack with the chemical weapons. So all of this is viewed as a war of terror on Ukrainian population to sow fear, to perhaps steer some pressure from citizens on political leadership, on Zelensky to concede. But I tell you, from public opinion polling, despite all those horrible fears, Ukraine stands very much resolved to take to do what it makes to preserve Ukraine.
I just mean, we heard from the Deputy Foreign Minister earlier, Russian Deputy Foreign Minister Ryabkov, and he said that Russia's stance on nuclear weapons is responsible. I think everyone's concern is that if the U.S. or other Western allies go in, for example, to close the skies over Ukraine, create a no-fly zone, and Putin sees that as entering the war, that he could then attack back with, nuclear weapons. Is that a concern?
I think we have to be very clear that Putin doesn't need any pretexts to use whatever weapons he chooses.
fair.
And we have
Yeah.
seen it we've seen it in the course of this campaign. He decides to use supersonic weapons unnecessarily for this particular military campaign, simply to demonstrate the show of force. And the no-fly zone has clearly been taken off the table, and it has been communicated both by by NATO Secretary General, by President Biden. Putin knows it. So that's why he's inventing all these false narratives of Ukraine restoring nuclear weapons or Ukraine having biological and chemical labs that allegedly it may use against its population. This is purely for Russian domestic audience to justify this brutality that is seeping through social media into Russia.
Orysia, it must be difficult to understand, perhaps, given the disruption, the displacement of people in Ukraine, what it is that Ukrainian people think about specifics here. I was interested in President Zelensky's suggestion there could be a referendum on any terms of any peace agreement. I don't think we've got that far yet. We certainly haven't. But what do you think that would reveal? Where do you think Ukrainian popular opinion would be on what a peace deal would have to look like?
Well, at this point, we have public opinion polls that show that, in a way, Ukrainians are very much clear that they are not willing to compromise any territorial integrity. For example, there is no support for conceding more territory to Russia, not to mention even conceding the annexation of Crimea. This is something that may change over the time depending on the war geography, so to speak. But at this point, Ukrainians are clear that they need a new security treaty. Perhaps if NATO membership is not possible, naked neutrality, so to speak, is neither an option. And there have to be some kind of new treaty to protect Ukraine's territorial integrity. But Ukrainian population at this point is very much determined to continue the fight because they understand the more territory they hold, the better peace deal there will be, if there is a peace deal.
Okay, that's an interesting point to leave it on, Orysia. Thank you very much. Orysia Lutsevych of Chatham House with the latest on Ukraine. Coming up on later programming, Angela Stent, Georgetown Professor of Government and Foreign Service. That's at 8 a.m. in New York, 12 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Nickel is trading within London Metal Exchange limits today for the first time since reopening. Mark Cudmore and I spoke with the LME CEO, Matthew Chamberlain, ahead of the market opening in London.
The fact that we've gone limit down for the last 4 days does suggest that that clearly the price had been inflated by that short squeeze, and it is now logical, with the situations around that squeeze having been resolved, that we would come down to a more normalized level, and obviously the Shanghai price is a good guide there. Today we'll be trading down into the with the limit ability to go down into the 26,000. And I think there is a good chance that we'll discover a price over the next couple of days, possibly even today.
Good morning, Matthew. So you've now had a couple of weeks to consider what's been a pretty hectic situation. What do you think you went wrong? And I know there are many counterparties involved, but I specifically want to pin you down to what do you think the LME did wrong or could have done better?
Yeah, so I think we've clearly been dealing with the immediate challenge, and there's going to be a lot of time for us to reflect on the lessons learned. But I think that there's a few points that I would make. The first is how this squeeze, how this position was allowed to arise, and I certainly think that we need to look more closely again at oversight of the OTC markets, because clearly this is an issue that came from the OTC markets and then impacted the exchange. As has been well publicized, we have had challenges in delivering our price limit. So in order to bring the market back to normality, we needed to make technical changes to our systems to allow to limit the price going down on each day. And that's not something that the LME has ever done before. And we worked very quickly to bring in that price limit technology. And we clearly ran at that hard so that we could get the market reopened. There have been some well-publicized glitches, which I don't think have made a difference to the fact that we just went limit down each day, but clearly have been embarrassing for the LME.
Yeah.
And again, that's what happens when you have to deliver these things at speed to reopen the market.
That was the LME CEO Matthew Chamberlain with us before the market open in London. Nickel down nearly 10% so far in today's session, but importantly, that is not limit down. That is not as far as it could have fallen. Let's bring in Will Kennedy, Bloomberg Executive Editor for Energy and Commodities. So is this price discovery we now see on nickel in London then, Will? We haven't fallen 15%, which I think is still the limit down. We're down by just shy of 10.
Looks like it. And as we've been noting in our reporting the last couple of days, that brings it closer to the price in Shanghai, suggesting that that's where the global market
So it looks more normal.
Well, it looks more normal. We seem to be through the worst of this extraordinary market turmoil, and to have found a price where people are both willing to buy and sell.
So the nickel story is fascinating for sure, and I think the LME piece is probably the most interesting of that. I want to get to the oil story, though, Will, because the BN copy on the Mohammed bin Salman, Joe Biden relationship, I thought was just striking today. How can the U.S. convince the Saudis to help them after having ignored them for this entire administration?
Yes, I think the Saudis are going to play hard to get here, and that they will push for a serious quid pro quo if they're going to accede to US demands and other Western countries' demands like Japan and the UK to pump more oil. The problem that Saudi Arabia has is that its alliance, the OPEC Plus coalition that it shares with Russia, has been an enormous success, bringing together the two biggest crude producers of the world into a demand management system. And to some extent, Riyadh is caught between the two. It's going to be quite reluctant to do anything that jeopardizes that relationship for the long term. OK, Will, thanks very much. Of course, big focus also on EU policy and whether we see a ban on Russian oil. We'll follow the politics in Brussels there. Bloomberg's Will Kennedy joining us with the latest on commodities. More Bloomberg surveillance is ahead, including an exclusive interview with the St. Louis Fed President James Bullard. That conversation at 8:30 a.m. New York time. European equity markets move to the upside, up by 0.5% as yields on US Treasuries continue to rise. This is Bloomberg.